Good afternoon, good morning, good evening, everyone. It is 1:26 p.m. Eastern Standard Time on this second day of January 2021. Happy Tuesday. Taking a look at the dollar index here, kind of capitalizing on what we've been discussing over the last couple of weeks and yesterday. Definitely looking at a couple levels here. First, looking at where the DXY is at on the weekly chart on the top right. I'll just maximize it. You can see that we are continuing to press up higher here. We are right up against this Fibonacci extension level of the 618. Makes total sense why we'd be finding a little bit of a pause there. We're not too far away from where we need to go to find our area where we're going to probably want to consider, if you short this index, to short it, or to consider taking longs in things like the euro dollar, the Aussie dollar. But we are continuing to push up towards that level there on the daily chart. The dollar index inside the cloud, which is a very nasty place to trade. Nobody likes to be in there, but that's where we're currently at. Let's take a look at some of those Aussie pairs we looked at. Aussie Loonie continuing to push south here, and the Aussie Swiss still above yesterday's open, but it's kind of banking in between the Tenkan Sen and the Kijun Sen, but otherwise still looking at lower prices there. Aussie Yen, a little bit pressure. Looks like it's about to roll over to the south, especially if we get a close below the Kijun Sen on the daily chart. That would be the first close that we've had below the daily chart since... we'd have to go back to November 2nd of 2020. So be on the lookout for that. And then the Aussie dollar, US dollar, of course, we see that continuing to drop down here. Now, look for this to accelerate as the lagging span, the black line, as that travels down. If it closes below the candlestick like the daily here or tomorrow, if it closes below at 75.39, that is a recipe for disaster. However, actually, it's not even a however. That is a very likely move. We talked about this condition here on the right side, the volume profile. Again, observe the space in between this node and this node. So these are high volume nodes, and there's a huge gap in between, which means that there's little participation, little resistance. So the theory and the way that we trade it is when prices break a high volume node, they will usually get kind of sucked into the next one over a very fast period of time. So we should have a very easy move to the south before we find any type of support, which volume-wise on the volume profile is down here. There's a pretty substantial weak zone between where we're currently at 75.85, and then all the way down to it's up about 300, exactly 300 pips lower, roughly, is what we should expect to see in the Aussie dollar. Take a look at the euro dollar. Same story. Very, very thin volume profile. Would expect it to come down to the 118.30, 118.40 zone. So that is another, what are we at, 120.20? I mean, we could go down to 118.20 as well, so it's 200 pips lower. That is a very, very likely move, and that would actually be a pretty nice retracement if we want to look at any continuation move higher. Extension-wise, yeah, the 1.236, that's not a very likely zone, but that is within the range that we could see it extend down lower to. Then the pound dollar. The pound is pretty resilient. I mean, it's it's certainly hanging on better than everything else, and it's got a pretty thick volume profile. And I think one of the reasons that if you want to see a reason why the pound is so resilient against the dollar, just from a volume at price analysis perspective, is look at the volume profile here on the right. Are there some spaces in between high volume nodes? Yes, but not really, nothing drastic. So it's a pretty thick profile, meaning there's an equal distribution of buyers and sellers, meaning that there has been an equilibrium established. So it's really not that easy to move further south. It can be, probably, if we break down below 135.70 to test 133.60, but where we're currently at, this entire range here, it doesn't look like we're going to see as much of a push down south in the pound compared to what we are currently seeing in the euro, the Aussie dollar, and we haven't even looked at the Kiwi. Kiwi's pretty tough too. This one, out of all the ones we're looking at, this one has, I think, the most immediate and fastest move to the south. So if you missed the move on the euro, if you missed the move on the Aussie dollar, the euro dollar and the Aussie dollar, the pound dollar looks pretty stuck up there. The Kiwi dollar US dollar is the one currently that looks like it has a good opportunity to consider taking a short on, and then watching it just kind of fall quite a ways. I mean, it's got a pretty big drop between the high volume node that is trading just below right now here at 71.77, or at 71.52 right now, but then this high volume node down here, 66.61. That's a 500 pip drop. I don't know how likely that is, but I do know I like that price action. If even half of it comes out, that's great. If it does dip, probably find some support down here at 70.40. But yeah, that is definitely 66.44. Is there any kind of area roughly that's bottom of the cloud on the 3-week chart maybe? But yeah, so check out the Kiwi dollar, US dollar. Watch out for this one to have a nice drop. Man, that is that daily profile right here. That is a thick, that is a huge high volume node up here. Very tight, very, very tight range. That is established between 72.02 and 71.70. Man, like a 32 pip range. Jeez. That's stuff. The price breaks down below that. Watch out. That's a pretty fast trip down. That's a 500 pip catastrophe waiting to happen. All right. Well, thanks guys for watching this video. Hope you guys' trading week has gone well for you so far. From all of us here at Exchange Rates UK TV, thanks for watching, and don't forget to like and subscribe. Look forward to speaking with you on our next video.